Greetings, everyone. Good afternoon, good morning, and good evening. It's so nice to be here with you today. My name is Phil. I'm with Pragmatic Trading. Today is the 9th of November 2023. The New York stock market will open in 5 minutes. In 5.5 minutes, so this will be an interesting ride. First and foremost, I want to say that I'm happy to be here with you. I want to thank you for taking your time to watch my videos and follow my weekly and daily updates. So, if you're ready, let's buckle up and let's talk about what has happened recently and what is happening now. Okay? So, we are having a local breakout from this week and a half long consolidation range below at 34-35k. We are breaking the range. Yes, I do know that I was slightly bearish for the range, but as always, and as I have told you many times, I am that trader and investor that will always and always and always have a plan for both the upside and the downside. So before we start talking about what's been happening recently, what is happening now, etc., I want to do a very quick recap of what I have said in my previous video. My previous video is an educational one, but there was a weekly analysis inside of this video. So if you haven't watched my video, it's called Emotional Distribution and Accumulation Range. It's a very useful video. It's full of helpful information that can help you to understand and comprehend what is happening within the range, how is the range being formed, why is it being formed, and what can we expect from each range. So before we start, let me turn down the music, let me turn it off, let's turn up the volume, and let's hear what did I have to say. So in this video, if you have watched it, if you plan to watch it in the future, I have mentioned two scenarios, or maybe 3-4 scenarios. Of course, my first primary thesis was that we are going to break down first before continuing up. I remain bullish for the whole move up. I was bearish for the range. That was, I'm not sure if I can call it a mistake, because I will always have upside targets and downside targets. So if one of my theses is invalidated, the other one is validated, and that's how I trade, that's how I invest, and that's what I'm trying to teach all of you. Okay, I'm trying to tell you that you shouldn't be strictly biased to one scenario. Why? Because you cannot be right in 100% of the cases. You will be wrong, and that's okay. Your job and your responsibility is to mitigate your risk, so if the things don't go your way, you should be able to trade the other scenario, to invest, to secure your profits, and you should be prepared for all of the scenarios. So give me a few seconds, let's hear what I have to say. So disclaimer, this was one of the scenarios. Listen to what I had to say. Can we create another high, triple bearish divergence, retrace a little bit and continue up? Yes, we can. I don't see why not. Yes, I don't see why not. So yes, my primary thesis for this range, my primary scenario was that we are going to play out the daily divergences, retrace first, then continue higher. So I was bearish for the range. I cannot call that a mistake, because that was one of my scenarios. If that was my only scenario, then yes, I would admit, yes, I was totally wrong. I was saying the asset will go to the downside only, but as always, I have targets both above and below. If you think that's something bad, if you think I'm doing that to hedge my own words, you're blatantly wrong, and you will realize and learn that over time when you become a serious trader and investor, because every single investor, every single big money trader out there has targets above and below, and they trade accordingly. Now I can scroll down through my Twitter page and show you where I told you many times it's best if you have hedge shorts from the top of the range and hedge longs from the bottom of the range. This range has been very rewarding because you had plenty of opportunities to short, take profit, short again, take profit and short again in case we go down, and you had more than plenty of opportunities to long, even exit your longs and enter again to have another long in case we break out. So my point is, never stick to one bias, never stick to one scenario. Always be pragmatic, be objective, always be ready for every single scenario out there. Okay? So in case you're wrong with your primary thesis, you will be right with your secondary thesis, and I don't see a reason why you can't make money with both, right? So let's turn down the volume like this, let's open the music, let's play some blues. Alrighty. Now, I want to open my Twitter page and let's see what did I have to say more than 12 hours ago. It was around 13-14 hours ago. Now, I said triple bearish divergence in the making. In the making, okay? You have to be careful with your words because your thoughts create words and your words create actions. Before you enter any trade, it's just an idea, right? It's just an idea, it's just a thought. Then you conceptualize that thought, you turn it into words, just like I did here, okay? And then that word becomes an action when you execute your trade. So I said triple bearish divergence in the making. Things are very simple now. If this gets invalidated, we go to 38k, 44k, and the whole market is very bullish. Second scenario, if this plays out, we go to 30, 32k area. So I re-entered my Bitcoin short after a liquidity hunt. Why is this important? Well, re-entered. So this was my maybe 5th or 6th short in the range. Okay, I took profits from all of the shorts before, and this was the only short, or these were the only 2 shorts that I got stopped out from. Okay, now why is this interesting? I always tell you, if the bearish divergence gets validated, you have a short ideally and you will make profit. If it gets invalidated, the primary thesis, if it is your primary thesis, gets invalidated too, and if you are in a long, even better, you will once again make profit. So do you understand now why is it so important to be hedged, and why is it so important to refrain from being subjective and highly biased in one direction? Okay, if you're always prepared for both of the scenarios, and if you have two hedge positions, which is not easy at all, you will be able to make money wherever an asset goes. So even though I shorted this market 5 times, before that, like maybe a few weeks ago, I told you that I will long 26 and 27k. I did it. I took profits. I could have held that trade up until now, but I don't care because I made money. I made profits. I'm still in a winning streak, so I truly don't care where this asset will go. I hope you have your spot bags. I hope they're printing. I hope you're taking and securing some profits, at least partially, and I will tell you why. Of course, this is not a financial advice. I'm no one to tell you what you should do with your money, okay? Your money and your crypto is your own responsibility. So, enough with the recap. Let's buckle up and let's talk about what is happening now. So let's go back to the naked chart, daily chart. We all see this range, right? What did I say in my last video? One of the main points or main takeaway points was that after a mark up or a mark down phase, we have a consolidation range before continuing the move or reversing the move, right? So this is one example. The second example is the latest markup move, right? We went from 26.5. This is the place where I entered my long. I exited my long here at 27k. I was in a great winning streak. I still am. So I don't really care if I missed out the remaining of the move. I secured my profits. I said I want to go outside and live my life. So what did I say in my previous video, which is very useful? After a markup or a markdown phase, we have a consolidation range where market makers create a range along with the retail to reverse the move to gather enough liquidity so they can collect it. So first they gather liquidity within the range, and when there's enough liquidity being gathered, then they collect that liquidity by continuing the move or reversing the move. So what had happened? My primary thesis has been invalidated. We didn't drop, okay? But my secondary thesis was validated with this rise. So at the moment of me posting this tweet, that was 11 hours ago, the price of Bitcoin was around 35.9, right? 35.5. So if you really wanted to play the long side, you could have done that even then. So even then it wasn't late for you to enter along in this area. Now, since my primary thesis has been invalidated, since I had the targets above, it's time to look at those targets, right? First, before I show you my horizontal targets, I want to focus on something very important, okay? And this is one of the biggest reasons why I'm filming this emergency update. It's just a name, nothing is emergent. Nothing is an emergency if you are fully hedged, if you have your levels, so whatever happens, you don't care, you're ready for all of the scenarios, unless Bitcoin pumps to 100k in a straight line, or unless it dumps to 10k, but even then you can have a plan and you can place your limit orders before. Now, what is the most important thing in this video for now? Well, I have a few important things, but first let's focus on the macro ascending pitchfork. So this is the only pitchfork that I currently have, which is ascending. I'm really sorry, there are some ads and I don't want to buy YouTube Premium on purpose because I don't want to give money for nothing. So what did we have here? We have the regular macro ascending pitchfork. Bitcoin has been respecting it since 7th of November 2022, so 367 days, a whole year, Bitcoin was trading inside of this pitchfork. What is interesting about pitchforks in general, this is the non-log chart. If I switch to log chart, things change, right? Things change significantly. Now, what is interesting about this one? If you switch from daily and weekly chart, you will get slightly different results. Even if we switch back to the 4-hour chart, we will see that the results are a little bit different, right? Now, what is the same for all of these time frames? Well, one thing, we are slightly above the top of the macro pitchfork, okay? If we zoom in a little bit, we see that Bitcoin was struggling to break the golden pocket, right? You can see a breakout, a fake out breakout, then rejection, consolidation, daily closure above the golden pocket, and a markup move, local markup move, right? So we can fairly say that Bitcoin escaped this range. Now, what is tricky about this place right here? Well, usually, okay, in most of the cases, top of the pitchfork is the place where an asset reverses and it goes back down to confirm one of the diagonal breakout points. You see how this was resistance. It was resistance. We consolidated below the resistance and we made a local markup move. You see, resistance, 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 support, markup. It looks pretty easy, right? Well, it only looks easy. Now, top of the pitchfork is where if I was in a long here or here or here, I would secure my profits. I would close at least 30 to 50% of my position and look for a re-entry, right? So naturally, I'm not saying that will happen, but naturally top of the pitchfork is the place where an asset reverses back into the pitchfork, and then it can do two things. It can find support in one of the diagonal previous resistance zones, right? It can find support before continuing higher to try again, reject again, or consolidate again above the previous resistances, and then continue markup move. Now, one thing is for certain: if we break the top of the pitchfork on the log chart, on the non-log chart, I'm sorry, the move will continue higher violently. Okay? So short term, I would be slightly bearish, slightly, and when I say slightly, we could see a retrace a little bit below, then another run higher. Why? Well, that's how assets behave at the top of the pitchfork. The bottom of the pitchfork, they behave the same, only in the opposite direction. So if an asset goes slightly below the bottom of the pitchfork, and if it creates a deviation, if it goes back into the pitchfork, it can create a very violent move to the upside, right? Where it will confirm one of the previous support levels as resistance and then continue back down, and if it loses the pitchfork, it will make a very violent move. So one thing is for certain: no one knows what's gonna happen, but what I can know and what can I help you with is that if we reclaim the top of the pitchfork as support, we will continue higher in a very violent manner. But as always, nothing is as easy as it seems, right? Because this is a non-log chart. If we switch back to the log chart, it tells a whole different story. Why is that? Well, this is the first and initial touch with the golden pocket of this pitchfork ever since April this year. I'm sorry. Why is that significant? Well, that level produced a very strong move to the downside, right? Twice, almost twice. So now, on the log chart, we're at the same place where there's a top of the pitchfork, the same pitchfork on the non-log chart, right? A log chart, golden pocket area, non-log chart, top of the pitchfork. So I would be very cautious. If I was in a long, I would take some profits partially here, and maybe, just maybe, look for a hedge short. But if you ask me, this is a very risky area, very volatile area. An asset can go up and down very quickly without respecting local levels. So if you ask me, my bias is short-term bearish. Yes, we can retrace a little bit below and then continue higher. Yes, somehow we can retrace, get back into the range, find acceptance, then continue lower, trap more shorts, and then continue higher and make a higher high. So I have presented you with 3 scenarios already, and I'm not halfway there. Okay? What is tricky about it and what you should memorize and remember later on is this is the non-log chart. On the non-log chart, we see that we are at the top of the pitchfork. On the log chart, we are at the golden pocket of the pitchfork. What does it imply next? Well, if we retrace from here a little bit, and I believe we could, I'm not saying we will, I believe we could. Once we break this diagonal level, we will most likely visit the top of the pitchfork, which is around, let's say, 41 to 40, 44, 45k, depending on when we hit it, because it's a diagonal level, right? On each day, the price target gets higher and higher and higher, right? Now, why am I saying this? Well, if this is a strong resistance, which has proven itself to be very strong, right? I would expect a short-term retrace. Okay, why? Well, it is the initial touch of this level, right? But if we reclaim this level as support in the following days and weeks, I am firmly convinced we will visit the top of the pitchfork. Why? Because top of the pitchfork, I'm sorry, median line and the bottom of the pitchfork are like magnets. Those zones are like zones that can draw the price to themselves, right? Why is that? Well, let's go back to the non-log or log chart, right? What do we see here? We rejected from the median line, and as soon as we broke the median line, we went up like mad, right? Another 23%, okay? This is why those pitchfork zones are very, 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 very important. Now, why is this interesting? Let me switch back to the weekly chart so you can visualize this better. Now, besides diagonal levels, I have horizontal levels. Now, before I show you these horizontal levels, let's go to the left. Let's look at what happened and let's talk about the context of this bear market here. So, if you look at the candlestick patterns, naked price action, what would be the most important places of a breakdown? Okay, so look from the top to the bottom here to the last breakdown. Of course, this is an important breakdown phase, a breakdown zone, but if you ask me, it's not as important as this one here. Why is that? Well, simple as that. Look at this. We had this range, right? 2021, 2022 range. 2020, 2021, 2022 range. If we look at this range, yes, you can always take the horizontal array and you can always say, aha, this is the most important breakdown point. Well, many traders do that, and many wannabe investors and wannabe experts did that. Truly sorry. 3, 2, 1. Many wannabe experts always say like, oh, those are the most important levels. I tend to disagree. Why is that? Well, first, those are the wicked lows, the wicks. I would use candle bodies, and you can see how this candle body here, just a second, produced a very nice reaction to the downside. That was around 24% drop, right? Initial touch with this level produced a 24% jump, and you could blindly short that area. Of course, that's not something you should do. I'm just saying what is possible. Now, let's go back. I don't want to fly off the topic. If you ask me, the most important breakdown area was this area here. Okay, why is that? Well, first, it was a breakdown area of this January-March 2022 range, right? Support is becoming resistance, or there was no support once again, and we didn't retest it as resistance. If we go to the right, we see that we are currently retesting those breakdown zones. So let's take these candle bodies. Let's take these candle bodies. And we can take this one too, but never mind. So why is this important? Well, you can see these weekly candles. Bitcoin has been struggling to break down this range, and when it did, we had a very violent move to the downside, 53% and 58% in total. Okay, so if an asset breaks a level, breaks the support, if it trades below the support, what will it do next? It will go back to retest that support as a resistance. So here you have two scenarios. Bitcoin can confirm this wide zone, very wide zone, as resistance, and it will continue down and continue the bear market. So if you watch my videos, you know that I never focus on long-term analysis. Why? Because I'm a trader, I'm an investor, I know where to buy, I know where to sell, etc. And I don't care where Bitcoin will be in 5, 10, or 15 years. Of course, I do care. I would like this asset to succeed. I would like this asset to go higher and higher and higher. Why? Well, simply because of the volatility. More volatility means more entries, better trades, better profit, etc. And I hope that all of you make money. I truly hope that all of you make money. I don't know if you're gonna make money or not, but I truly hope you're all gonna make money. So let's go back to the topic. This was a breakdown point, breakdown zone, whatever, mark it however you want, okay? Now, one of the other significant breakdown points is this one here, right? Breakdown, retest, continuation. So I am fairly convinced that this is gonna be bold, this is gonna be brave, but if Bitcoin long term can hold 37 and this whole range up to 48k as support, if it can somehow hold it as support, new all-time highs are possible. I know that the economy, the global economy, is in an awful place, okay, awful place. But I wouldn't be surprised to see Bitcoin doing something crazy like this, like creating another high to trap more people who are glued to one 100k scenario, and then continue back down, only to form a big and very long distribution pattern. But I don't want to jump on trains. I've just shown you that as a possibility. So these are the horizontal breakdown zones if we talk about the structure, right? I had this pitchfork here. I still have it. Let's turn on the non-log chart. Okay, so what is interesting? Well, the top of the pitchfork is approximately the same place where these breakdown zones are. So this is a very important area for Bitcoin. Okay, besides these zones that I will turn off right now, okay, you know where these levels are, or even better, let's make them smaller. Let's make them smaller so you can visualize it better. Give me a second. Okay, let's turn on the usual line. Just a second, please bear with me. Alrighty. Of course, I do have some macro bias zones. I have posted this chart. Let me turn these off. I have posted this chart maybe a week ago or something like that. And I told you that if we break to the upside, I will be looking at these zones. So what do we have? We have some very nice confluence at 38.2. And that's why I use this this red rectangle to mark this zone. So this is one of the most important zones to be broken if Bitcoin wants to go higher. This is where I would expect a first reaction before continuing higher. Maybe this reaction will look like this, and then we're gonna continue higher. No one knows, but I have this level. I do expect some kind of rejection at 38.2. Why? Well, these are strong fibs. This is a strong breakdown zone, and here is the top of the pitchfork. Okay, so yes, we can have some kind of a deviation and a retrace. That's why if I talk about the short term, I'm slightly bearish, and of course I'm still very bullish on the move because we are in the markup phase. Okay, this asset isn't showing any signs of weakness. Even if we switch back to the daily chart, if we look at the divergence, it's being invalidated as we speak, and I told you that's one of the scenarios. So if you are in a long, if you see this invalidation, you are safe in your long. But of course, better safe than sorry. Take some profits if you think this is a, let's say, a place where resistance is stronger than usual. Now, if and when we reclaim this level, we could go higher towards the 44k, where I have a lot of confluence. You see, a lot of confluence. All of these 4 fib pools lead to the same place. Now, what did I measure here? I measured the potential of this wave upwards. Okay, I have measured the upwards potential of this downwards wave, right? I have used the traditional fib retracement pool. 54% is right here. Okay, and what else do I have? I have the upwards potential of this downwards move, right? So I have 4 different pools that lead to the same place, 44k, 42.4 to 44k, and this is exactly why I have placed my second rectangle here. So if you ask me, guys, I don't want to waste your time, This is the most important area for Bitcoin mid and long term. Why is that? Well, let's look at the past. Let's take a look at the past. Straight up, straight down, right? Straight up, with a lot of price action in between. So why is this area very important? Well, if Bitcoin is able to reclaim this level as support, we could easily expect all-time highs. If not, we could easily get back accepted in the range and maybe create an all-time low. Oh, I'm sorry, all-time low. We could create another low lower than 15k. But I think it's pointless, it's useless to talk about that, okay? I will only mention it, but I will not talk about that as a current scenario. Now, there's one more thing that I want to tell you, one more thing that I want to show you. If we open the same pitchfork and if we switch back to the log chart, what will we get? Well, we will see that the top of the pitchfork is around 42, 44k area. So we get more confluence in the area. I don't think Bitcoin will break this level so easily. I think we are bound for a retrace and we are bound for more ranging. As far as I'm concerned and as far as I can see, Bitcoin can spend maybe 6 more months between 30k and 50k, right? That can happen, and if that happens, you should be prepared for that. And this is why I make these weekly analysis, and this is why I'm doing my best to be here with you and to tell you what I see and to tell you what do I expect. So, as of now, if we go back to low time frames, right? I see no divergence on 1 hour, I see no divergence on 30 minutes, I see no divergence on 15 minutes, okay? I do see that my very important level 38.1, 38.2 is very close, so I do expect some kind of a reaction here. If we do not create a bearish divergence inside of this resistance, this can easily continue higher towards the 39k or 40k. If we do create a bearish divergence on 1 hour or on 4 hour, we are bound for a retrace. So as of now, I'm sidelined. The worst thing you can do, according to my strategy, is to enter a short here without short signals or short arguments, or to enter a long after a markup and the markup phase. So sit on your hands, wait for this asset to show you something, to show signs of weakness, signs of strength, and then trade according to your strategy. Okay? So guys, that's it. I hope this emergency, if I can call it like that, emergency update is useful to you. Okay, I've talked about many useful things. I would like to say something that's very bad for the monetization of this video, but I don't care about it. I don't have enough views, and I truly don't care about earning money from YouTube. This is the third ad in 30 minutes. So I've talked about what I see, I talked about what has happened, and I talked about what could happen next. One last time, okay? I do expect some kind of a retrace here, simply because this is a first retest after a year and a half almost, okay? This was a breakdown point, breakdown zone. So naturally, even if we go higher, we should have some retrace or some kind of a reaction towards the downside. That's one of the reasons. The second reason is that we are at the top of the macro pitchfork, so I would be very careful here. We could deviate a little bit and go back down to retest this 35-36k range to find support, to confirm it as support. That is one of my primary theses, short-term bearish, but I am not fully bearish. Why? Because I don't see any signs of weakness, okay? I would like to see the divergence being formed or anything similar before telling you that I'm convinced price will, or an asset will, reverse, okay? My secondary thesis, okay, is that we somehow continue the violent markup move. If that happens, I would switch to the log chart and I would say, okay, if we break up, if we break out this golden pocket and all of these levels, I would expect us to hit 41k pretty soon, right? Maybe next week or something like that. But as I said, I think Bitcoin is bound to retrace a little bit here. I won't say it will retrace because I don't see any significant signs of weakness, but if I do see them, I will let you know and I will tell you on Twitter what is happening. So guys, if you want to support my work, if you like what you're seeing, if you like what you're listening, if you like my analysis, you can support my work by doing the following things. If you want to get my all of my updates, feel free to follow me on Twitter. My username is PragmaTrader. My name is Pragmatic Trading. When I don't have time to make videos like this one, I always post my updates on Twitter. Of course, if you like this video, if you find any value in what I'm saying, in what I'm showing you, please consider supporting me by liking the video, sharing it with someone that who also can find some value in it, and of course, please let me know what you think, okay? Leave a comment, tell me what you would like to see in my videos. You can always ask me something. I will find some time to reply to your comments and to tell you what I think. And of course, if you want me to analyze a certain asset, an altcoin, some indices or commodities, let me know and I'll tell you what I think. And the third way how you can support me, well, I have recently became an affiliate partner for MEXC exchange. Why? Well, simply because I'm a day trader, I'm a scalper. Yes, I am also an investor, but my primary job is to trade. So they have very low fees. Maker and taker for spot is 0%, and for futures, maker 0%, taker 0.0.1. As far as I know, these are currently the lowest fees on the market. I will not shield this exchange, but I am using it. As you can see, I am using it, and I will tell you that so far they're so good. I'm their official partner, so if you want to get some juicy bonuses, if you want to support my work, please consider join using my referral link here. It's on my Twitter. If you join using this referral Twitter, you will get some bonuses. They last for... I'm sorry, if you use the second link, you will get some bonuses. They last for 27 more days, and if you use this first referral link, you will get bonuses too. They're not so big, but they're worth a try. So guys, once again, thank you for listening. Thank you for being here with me. I truly appreciate all of your support, all of your critics, and anything like that. I hope you'll have a successful weekend, and I hope some of you made a lot of money in this markup move. As always, Pragmatic Trading loves you and wishes you all the best. Bye bye. I'll see you next time.